you are here to find high quality day trading analysis and technical information on all sorts of different types of trading, this is the channel for you. Sorry, I kind of fumbled that up. It's been a long day. I'm Pat Mitchell. I've been a seasoned professional for the past 11 years, day trading and successful and consistent for that time. Also running Tricktrades, which is a service. But I'm here to give you, viewers of YouTube and X, free quality day trading education. So today we're going to be talking about trading in and around all-time highs, as well as averaging in to a trade short into technical resistance. So there's a couple of good lessons here for today. We're also going to go over a trade that I personally took on SPY short, kind of split up into two different trades, and I'll explain why. Let's go into the charts. Let's rock and roll. Okay, so here we are, guys. We were looking at both Qs and SPY. I'm going to turn off my crosshairs here for a second. Now you're going to see a lot of levels that were struck on SPY. Those were just in case, and it was more to do so with a lesson. But the main level that we wanted was the previous close. There was a little bit of caution because Qs had a lot of distance, way more distance than SPY into that previous close. So when that happens, you really want to gauge your size, and you want to size down a little bit. Don't get crazy with size. It should be on something like that when you have that potential for it to basically go against you and not work, which is fine. It happens. You want to take somewhere in the neighborhood of half size to quarter size starting positions. And then you go from there as the day progresses. And that's kind of the key to success. Instead of just going all in full size position right off the hop without even knowing what the market's going to do yet. Because the market does reveal itself. It gives you very, very clear cues with price action, which is going to determine what it's going to do. So I'm going to go over to a next chart because I did specifically just trade SPY. So give me 2 quick seconds here, guys. Sorry about that. I should have had this actually queued up beforehand, but that is all right. So there we go. We have our intraday chart, our 1-minute chart, and daily chart, as we always do. Now, one of the key things that you want to start doing, because we did gap down a little bit. So when we gap down, especially when we're extended, we had a straight push up with no pullbacks whatsoever. So a straight push up on the daily chart back into the all-time high range. It is a recipe for volatility. So number one, you want to size down. And because we did gap down, we have no problems going long or short, but for obvious reasons, when you're extended like that and you do gap down, there's an air of weakness in the air, right? Like it's already telling us something. It's giving us a clue. It's telling us it's weak. Now, remember, I don't necessarily care where these go after that first hour of the morning. I'm a day trader. I'm a day trader first and foremost, looking for short-term opportunity based off of technicals. That's it. That's all I'm looking for. I'm looking for first reactionary tests into levels. So once you've defined yourself as a trader, it kind of frees yourself from your own mind thinking about, oh man, I should have went long or I should have went short. Look what the chart did after, right? Oh, I should have went long. Look at that. Who cares? Doesn't matter. You know, on this trade, and I'll go over the trade here in a second, I locked in $3,378 all within the first, 30 minutes of the day. Like, that's it. Easy peasy, man. Like, it's so important, so crucial to a trader's success. But back on to the topic at hand, trading in and around all-time highs. Now, as it's approaching that, there's 2 things that can happen. And this might sound a little goofy, but hear me out. Either it's going to come up and break out of all-time highs, or it's going to fall back down and fail. And I know that sounds a little goofy because obviously those are the 2 choices, right? But what I'm getting at is giving the chart time to develop to really tell you what it's going to do, and taking it that first half an hour of the market open or 1 hour, and like that's it, And there was a long opportunity on it, confirming strength just above this valid support level, and that's fine. That's something that you could take if you really wanted to. But the very first trade that I wanted was a long into this level. Okay. I wanted that long. Now, you might be wondering, it's like, man, but I've seen you start in way earlier than that. And I started in earlier on the short, and we'll go over that in a minute. So, why didn't I take that? Because I'm not risking just off of this level, right? I'm going to risk on all the way down to pre-market lows because that's my first technical support level on the way down. I can't just give it some random ass risk, which a lot of traders do, and then you're dictating to the market how the market should be traded, where the market needs to dictate how the market should be traded. Do you understand? So with that said, I have to wait into this level. It's got to get real close in order for me to take it. Why? Because of risk. So if we take a look here at risk, snapping my crosshairs, that level down to pre-market lows is about 70 cents, right? So that's why I want it nice and close into this level. And at that moment, it was just still too far away. Now, normally it's pretty acceptable. If we were at lows, I would absolutely be starting in, but we're at highs, nearing resistance on an extension. So we don't want to take that added risk. We really want to go short in that first hour of the market open. Okay. And that's what we did. So I'm going to zoom in on these entries a little bit. That way you guys can see them nice and clear. Okay. So what I did here was once it came down and popped back up into the opening price. So right where my cursor is, not up here, but right at the tip of where that cursor is. That was the opening price. Okay. So what I'm looking at is what I call trend formation. And I figured that this was a low odds type of setup. So I started in very, very small. So when you average into a trade, which is tonight's main topic, when you average into a trade, again, you don't want to go full in right away, right? If you know that you have your actual entry is way up here and you're going to start in here, you can't start in at 100%. So what I recommend doing if it's that far away, which actually this is quite a deceptive chart. It's really not that far away. Again, it's about 60 cents into that level. It's not very far. It's like I said, it's deceptive. I'm going to go with a quarter size position. That's it. So my normal position when I start in is 100 contracts. Okay. For some of you, that might sound like a lot. Don't worry about it. Like I said, I've been doing this a long time. But my starting, that's just where I start, is generally full size starter is 100. So if that's too much size and you can't really compute it, it doesn't relate, like it's not relatable, take a 0 off. Okay. So on this, or even take both zeros off. If you trade with 10 contracts, you would start in with 1, maybe 2, something like that, right? And then you would go from there. So on this quarter size position starter, as we start coming up, I am averaging in and I'm waiting for that one key moment. Okay. Now, right here, as it comes into this level and it's within 18 cents of this level, right at my bottom entry here, you see my lowest entry on this first trade. That's where I applied pressure. Okay. So these first 4 entries, it's very small positions, right? 25 contracts, might add in 50. And then once it gets nice and close, then maybe 75 I'll add, something like that. And then finally hit it with a full size starter. That's where I apply pressure and get my size in because I'm right next to that level. Okay. And that's really the key to averaging in. A lot of people kind of get confused and they don't really know what to do. Just think about it from like the very simplest, most stripped down, basic perspective. And the further up you go into the level, that's where you want to actually get size, right? So then that last trade there, or last entry, as soon as it pulled back, it was actually a really nice trade. I believe it was somewhere in the neighborhood of like 20%, just like within 2 minutes, right? And that's a beautiful thing with options, making 20% ROI in, minutes or even seconds. But that's where I took that off. And then I was patient. And I even told members, I don't know if I would add back in as it was coming back up. just because Q's was showing some strength at that time. So once it kind of proved that it just did not want to go higher, the action was very stiff, I start back in very small here. And then right at that last moment, right there, that's where I hit it. And I hit it with some proper size. As soon as I saw that, it's like, okay, this thing's done. It will pull back. Now it's going to find a support level. It doesn't mean it's going to crash. That's not what I'm saying. Again, I'm a day trader looking for very short-term opportunities. Okay. With first reactions into support or resistance levels. That's it. That's all I look for ever. I never deviate from that. So enter in there and then pay myself all the way down, coming down into support. And then once it tested that support one more time, really confirming that strength, that's where I stopped out the rest. And I was just holding small there. So again, locking in $3,378. So that's all it is. There's really, and I know like people love to give me shit when I say this, there isn't a lot to this technical wise when it comes to the active trading. It's what's up here that matters. And it's not intelligence. I'm not talking about IQ, I'm talking about EQ. It's getting your shit together emotionally, right? It's understanding how to curb those emotions, right? And that's why I talk so much about mentality and resetting that mentality and mindset and psychology. That's my main focus here. So if you want more psychology, trading psychology videos, go take a look for the longer videos. Those are about the hour-long videos, 40-minute videos. So if you notice, that's what you can tell. A technical video will be anywhere from 8 minutes to like 25 minutes. Okay? Those are the technical videos on my YouTube channel. If you see an hour-long video, that's all mentality and psychology and rewiring. That's the shit that'll actually make you money, guys. The technicals is about this much when it comes to day trading. So on that note, I don't want to ramble too much more. I hope you all have an incredible night. And if you want to continue on with your education and you're sick of spinning your wheels, come to tricktrades.com and we will see you guys there. Please make sure to like and subscribe. Adios.